Look, people love to make trading mystical, right? Like it's some unsolvable puzzle only geniuses can crack, but it's not. If you're losing trade after trade, month after month, it comes down to really one of two things, or maybe three. Either your risk is dog shit, your system is dog shit, or both. That's it. You don't need to be a PhD to figure this out. So, Dunki, let me throw this to you. If someone is losing 70% of their trades, is that always just bad variance, or is it proof that their system or execution is trash?
So are they losing 70% of the trades and negative? Then yes.
Yeah.
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 I mean, one or the other. Maybe both.
Maybe both. And look, for me, it was both when I first started. Right? I think for everyone, it's both. I mean, who comes out of the gate with risk management and a system on point? I mean, nobody, right? I mean, that just doesn't exist. You need some kind of training. You need to be rooted in the markets in some form. But why do I bring up that 70% number, do you think? Well, because,
Rate.
yeah, look, if you are risking 3-to-1 per trade, which means 1%, right? If you are risking 1% per trade and your reward is 3, you can lose about 70% of trades and still be a profitable trader. True or false? So why do traders, Brian, want to blame the market instead of themselves?
I think that people don't really and truly have a good risk assessment. If you're risking 3-to-1 every trade with an actual 1% stop loss, before your trade arrives, you have to have the entire trade mapped out. You have to know your risk before it actually arrives at your entry. And then you have to know. So taking a trade is like seeing the future, and you're taking a chance. But I really don't think, I think a lot of people do that because they go over leveraged and they properly can't assess risk. And I think that they take a loss, and then the emotions get involved, because you can accept risk, and then you can really accept risk. I used to say, like, okay, if I lose this trade, it's no big deal. And I would be over leveraged, and then I would lose more. And when it was actually gone, my actual emotions really got involved. And then I'd be in that loser phase. And then from there, it's hard to crawl out of that.
Yeah, and to be clear, when we are saying, I fall victim of this too. When I'm like, you're doing this and you're doing that, we're talking to a younger version of ourselves. We've all been there, Brian. I mean, I've been there where every single trade, I was Babe Ruth in it, right? Every single trade was the trade that was going to make me rich. Screw stop losses, screw 1%. You know, dude, I was risking 5%, 10%, 20% of my account.
The entire account in one trade.
On a single trade. So, Brian, then, how can you tell, do you think, if it's, because it's one of two things. It's either your risk sucks, your system sucks, or both. So how do you think, in your mind, that you can tell as a trader if it's risk or a system that's failing you?
I think that risk has to be the biggest thing in your system. Like, you can be the best technical analyst in the world, but if you don't really have a proper handle on risk, then you're going to go out the game. Like, you could be the best poker player in the world, but if you push all your chips in and you lose a hand, that's it. You're out the game. You told me early on that the purpose of this is to stay in the game. If you stay in the game long enough, you're going to start taking some pots. You're going to start building your chips. So I think that really it is risk.
So, Dunki, let me ask you, what does it say if you're losing more than 70% of your trades? Let's say you're losing 8 out of 10 or 9 out of 10 trades. What does that tell you? If someone came up to you, you don't know them, Jen, you don't know me, and I'm like, hey, dude, I'm losing like 80, 90% of my trades, and I don't know what's going on. What would your like gut or initial reaction, or if you had to give them like a quick little elevator speech to really kind of dive in, like what would you say?
I mean, the first thing I would say to them, I think you should be shorting the top and longing the bottom. And if you're doing it in between there, you're doing it wrong.
Yeah, but I think to even make it simpler, like if you're losing 80% or 90% of your trades, your system sucks.
Yeah, it's not working.
It's not working. And you got to
Reevaluate.
reevaluate. Do not be afraid to start over. This is a journey, right? Trading is a journey. It's not an easy journey. It's a journey of personal development, of introspection, of figuring out who you are, what works for you, what doesn't work for you. And if you're losing 8 out of, even 7 out of 10, I think, 8 out of 10 trades, it's time to do some looking within, I think. Your
Some soul
system
searching,
sucks.
brother.
I think that's a good way to figure out if it's your system or not. Like, just look at your win rate, right? Everyone should be journaling. You should know how many trades you're winning and you're losing. And if your journal says you're losing 70, 80% of trades, guess what? Your system sucks.
It's funny because I actually had that conversation with somebody in text messages, I don't know, a week or so ago. And the actual thing I said to him, I said to him, are you waiting for key levels or are you just taking a trade to be in a trade?
Yeah.
So
100%.
And literally 3 days later, he texts me back and says, dude, I think I was just taking a trade to be in a trade. Like, it took 3 days to think about it.
So here's a good one, Brian. Why, and we see this, like, why do traders mistake calling the move with profiting from the move?
Why do traders mistake calling the move than profiting? Because I misunderstood the last question, so I want to really hear this question.
No, you hit it.
I think that I do this too. Like, I'll call the move, but I won't trade it. Right? Why do traders mistake calling the move with profiting?
Yeah,
from the move?
I called it, but I didn't enter, or
yeah,
I got stopped out early or something.
Yeah. That could be. Every trade is unique. What happens to me a lot when let's say I'll make a prediction. I'll post something in my little section and I'll say, yep, coming down here, critical support. I'm going to look to enter a trade here, and then I'll look to exit here. A lot of times what happens with me is I'll have my plan, and then I'll probably get lost in the sauce, right? I'll be wrapped up in too many different things, or I'll be too zoomed in, zooming in too much and not remembering the plan, right? Because there's making the plan and then there's sticking to the plan. And typically after trades that I lose, I can look back and say, I didn't follow the plan. I knew, or I predicted it was going to happen, but then I got zoomed in. I got lost in the noise, and I forgot the plan.
So for me, if you ask me the question, like, how do you diagnose it? How do you know if it's your risk or your system or both? And I think you're probably not going to be able to know that if you don't have the data, right? So I think that's step one is you need to have the journal and you need to have the data. And we beat that to death in previous episodes, so I'm not going to even go into that here. Because it's hard to be honest with yourself as a trader. I think a lot of people deep down know that it's one or the other or both. But I think signs that risk is a problem. So if your calls are right, but you keep blowing up, you're probably oversizing. So if you're right, if your calls are right, but you're blowing up, you're probably oversizing. You're risking more. So you might actually, like, Nick, can you have a high win rate and still be a loser?
Yeah. Your risk to reward's not right. You're losing 300 every time you make 100.
So that's, I think, one sign that risk is a problem. I think another one is if your journals show that you got the trade right, but you got stopped early or late. I think that's another sign that your risk is not proper. So for example, if you're 50 times longing off of a level, but a little wiggle takes you out and then the trade goes, your risk is not proper. Risk isn't the issue because you knew the area, you had the trade right, but risk took you out. And I think, another one, like we kind of just mentioned, like if your win rate isn't terrible, like maybe it's 40 or 50%, but drawdowns are huge. If you're risking 5%, 10% of your account on a single trade, risk is an issue. Maybe it's the system too, but this points to risk. And I think obviously, I've been a victim of this. If one bad trade wipes you out, If one bad trade kills a good week, risk is an issue. You know, if you're consistently profitable per trade, but your account equity goes backwards, risk is an issue. And I think these are, look, we know people and we've seen people over the years, right? I mean, we've been doing this for 4 or 5 years. I lost track of how long we've been doing this, where we, as a community,
a while.
as
Yeah,
a community, right?
Yeah.
And
About 5 years.
we've seen people filter in, filter out. We've seen people blow up. We've seen people succeed, right? And we've seen, you know, equity going backwards. We've seen bad trades wiping out a week or a month. We've seen good win rates, but terrible drawdowns from a single trade. We've seen people who call it, who get the TA, but just can't get their risk proper. So how about signs that system is a problem, right? So your edge, your system, how you trade, how you look at the market. Well, I think this is easier to figure out than risk. And we talked about this. Brian, Dunk, both talked about this. If you're losing 70 to 80% of your trades, you know, despite disciplined risk, then guess what? It's a sign that your system is a problem. If you're journaling and there's no statistical edge, then your system is the problem. If the risk to reward doesn't work out, then your system is the problem. You know, if you're back testing and your forward testing shows break even or negative expectancy, your system is the problem. If you feel right, but data shows otherwise, your system is the problem. If you have no repeatable setup, if it's just random, then your system is the problem. Now, I think most traders fall into both. I mean, what do you think, Dunk? I want to say early on, right? Like, I mean, let's face it. The statistics are there. Most people fail. And I think most people fail because either one or two or both are broken. And I think from what I've seen, dude, based off of just years and years of experience, a lot of times it's both.
Yeah, I think, you know, at the end of the day, it's that little bit of wiggle room that they think they hit a key level and it just comes down and gets them one more time and then runs the other way. I think taking trades with, again, smaller amounts, lower leverage, if you want to put it that way too, just taking them in key areas and letting them develop is an easier way to trade than trying to snipe an entry. So like you're coming down to the back test on the hour like we had today on the low. I mean, key level, if it broke, it was going to capitulate down. And what we saw happening was, you know, people's bias started leaning into, hey, this is the time it breaks. And then look what we did. We ran the other way.
Yeah. Brian, what do you think is scarier for a trader? Do you think having a bad system or bad risk is scarier? What's more detrimental to P&L? Is it a bad system or bad risk?
Well, if you suck at risk, first thing that comes to mind is you're risking everything.
Yeah.
So, I mean, you know, it's more emotionally crippling when you see, I mean, having a bad system can suck because you just feel helpless and in total confusion. But to know that there's a system that works and to lose big is just,
because
I would say bad risk.
I agree with that. And I think Dunki would too, because I mean, you can have first of all, you can have the best strategy. And let's just pretend, I mean, it doesn't exist, but let's pretend there's like one strategy that someone's sitting on that just is a 90% win rate, right? Let's just pretend. You can have bad risk and still lose, right?
Yeah.
Now, the flip side of that is you can have impeccable risk, right? Like you just do not deviate 1%, you know, 3R, 4R, 5R risk to reward ratios, and you can still be profitable. You can still lose 7 out of 10 trades on a 1 to 3 or 3 to 1R and still be profitable. That's not really the goal, but it's just shows that math, right, can make you a profitable trader. Obviously, if your targets are in line and they're realistic. Dunk, do you think that most traders even understand what RR risk to reward or know what their risk to reward is or what they're even doing?
I think 5%
regard?
of traders actually size in the plays properly. I think
Oh.
they just traders, they get lucky once and then they just think they know the system and then it's just all downhill from there, man. And I think it's a repeatable cycle that people get stuck in. It's always comes down to the mental. Look, if the chart tells you to cut the trade, you should have cut the trade. You could have had that area marked out before you even got cut, or should have cut, and just put a stop loss there. If it blows through it, it's over. Like, let it blow through it. People move stop losses either direction and think they're smarter than the market. They doubled down on the stupid psychology that they can't beat.
Yeah, and I think you're not doing yourselves any favors when you do that. So if you, now granted, are there times where I get into the profit quickly because something changes in the market? Sure, right? I'm not talking about the one-offs or the exceptions, but generally speaking, if you're like, I'm going to go long or I'm going to go short here, here's where my stop's going to go, and you instantly start messing with it, all of a sudden now your plan's out the window. But not only
you
is
start
your
justifying the changes and
exactly, but not only is your plan out the window, but now your data is skewed. Now you're getting bad data, right? Because you're moving your stop around, you're not sticking to your plan, you're calling audibles. Now, if you get stopped out, the data's bad. If you set a stop, 1%, let it get hit. Just let it get hit. Then that's valuable data. That's valuable data that you can dissect, throw in your journal, and then get better off of.
Yep.
So I agree. I think that most traders do not know risk to reward. I think they don't plan risk to reward. I think not only do they not plan risk to reward, they don't know where to target, right? They don't know what to look for, what's a good trade, what's a bad trade, how to take profits. And we'll get into that in the strategy, in this strategy session here. So look, here's what I see all the time. It's guys who actually have a decent read on the market, right? They can call moves, they can draw trend lines, they can map out session liquidity, they can see the setup. But then they size like idiots, right? They swing for the fences on every trade, like the market owes them a freaking paycheck. And then they wonder why they blow up on one loss.
Yep.
And look, when it comes down to it, if you are winning 7 out of 10 trades or greater, if you're winning 3 out of 10 trades or greater, there we go, and you are losing, it is a risk issue. Mathematically speaking, it is a risk issue. It's probably a little bit of a system issue too, but you gotta fix risk first. So Brian, let me ask you, how much of trading or traders failing do you think comes down to just pure position sizing in risk management versus strategy?
Everything. I mean, if I had $1 for every time somebody said, man, I took a huge loss, and I asked them, what happened? And they said, well, I won like 5 trades in a row. And then I just thought, you know what? My system is dialed in. And then I pushed in all account. And then that ended up being the one trade that they lost. And they just took a huge loss. And I'm like, well, dude, there it is there. Like, you were growing. And then one trade took you out and just brought you back down to maybe even lower than you did before your winning streak. I hear that all the time. And I've done that too. You know, win 3, 4, 5, 6 trades. And I'm like, you know what? I'm just going to up my leverage, up my, and risk goes out the window because I just think that I'm dialed in. So yeah, I've heard that.
So why do you think, Brian, then, like, we see this, man. We see this all the time. Why do traders love oversizing like the market owes them something? You know, and look, this is us. This was us. This is me at the beginning, right? Why did I just love to oversize? Why did I love to have a 10% stop loss and slide my slider up to 50x leverage and smash long or short?
Just greed and impatience.
That's literally all.
I'm going to make up for the last 8 trades with this one.
Yep.
Yeah.
Yep. Or I think I mentioned this before, but my favorite was like, I'd get on like a losing streak And I'd be like, dude, the market owes me this one. Like, statistically speaking, the market owes me a win here. And then guess what? I would enter, and guess what the market would do?
Fuck you
Not owe
Slap
you.
the shit out of me. Slap the shit out of me again. So Dunk, what does proper position? And I know it'd be easier to do this on a screen and to show people, but we have a community. People can get in for that, and we can show them how to do that. But just what does proper position sizing even mean in practice? What does it look like?
It looks like you gotta set yourself up a fence. This is the fence I play in. If I want to risk 1% per play, this is like total account, right? So you want to do simple math. If you have a $100,000 account, I know this isn't the average. I lose $1,000, plays over. I'm not moving it till I lose 2,000. I'm not moving it till I lose 5,000. I'm not moving it till I lose 10,000. If I think it's a 2% risk play, it's at 2,000, right? That's a guideline and a fence that you put your strategy inside and you don't deviate. It's the hardest thing to be the person who doesn't deviate, but you don't deviate. It's so hard mentally to close that trade and know that money's never coming back, but that's what you have to do every single time. That's what risk management is. It's cutting your losses and admitting to yourself and the play you had set up that you were wrong.
Yeah, and sizing is hard for our monkey brains, for our emotional monkey brains, right? Greed hijacks sizing. And I get it because, I wasn't always trading with big money. There's people who are trading with little money and think they need to size up in order to grow their account. And that's just wrong. That's wrong.
If $10 is 10% in your account or 2% in your account, and you're not taking profit there to build for the next play, you're doing it wrong. You got to pay yourself every single time based on the incremental sizes of your account.
Yeah, and here's what people don't understand. And it's, Warren Buffett talks about it, right? Everyone wants to get rich quick. No one wants to get rich slowly. That's the game. The game is getting rich slowly. The game is trying to take out 1% from the market every single day. Is that realistic? Are you going to have losing days? Sure. But that's my goal. My goal is not to do 30%.
I hit 1% today, took that out, let the rest of the play ride, and got stomped out. Didn't take long.
Brian, your goal is not to turn, a $20,000 account into a $40,000 account in a day, right? It's to turn that $20,000 account into $20,500, right?
It's easy. Nowadays, my goal is to engage in the best trade, right? Is to just play out the best trade. It's so much easier to lose fast than it is to win fast.
Yeah.
It's so much easier just to see money go away super fast than just to win, double an account in a day or in a week, in a month. It's easy to lose an account in a day. You just go on tilt, push all in, and just say, screw it. Yeah, the market will definitely be obliged to take everything from you every time.
Yeah. And again, it's greed. It's our emotional monkey brains that stops us from doing things the right way because our egos tell us that we know better than everyone who's telling you what to do, right? Like, here's the blueprint. You risk 1% per trade. You know, 1 to 3 minimum. That's what you're going for. That's the goal. But that all goes out the window when you start seeing green and red and shit flashing across the screen. Our emotional brains take over. And here's what a lot of people do not understand, right? This is a game about getting rich slowly. You want to get rich quick, go bet it all in black in Vegas because your chances of, you literally have better chances in Vegas than you do at the charts. You do. The odds are against you. Like 95% of traders fail, right? What is it in Vegas? Like the house has a 1% edge, something like that, right? I mean, it's like 49-51 on some games. I think, isn't Baccarat like 50-50? It's like, so you literally have better statistical edge in a casino than you do in the markets. That being said, with proper system or proper risk management and $100 account and you're risking 1 and you're hitting 3, right? After, I don't have a calculator in front of me. I'm just going to spitball here, but After 6 months, maybe that's $2,000 now instead of the $100,000 you were aiming for, right? And then 6 months after that, maybe it's $10,000 now. And then guess what? Now it's that $10,000 just grows exponentially larger. 6 months after that, maybe it's $30,000, whatever the number is. Small wins compound, and the compounding happens fast. But when you play fast and loose with risk, when you play fast and loose with the system, you're just going to keep blowing up over and over and over again. And when we mentioned it, right? Can you win more than half your trades and still lose? Yeah. And I think there's a lot of traders in that spot who are actually have a solid win rate, but they're still losing because their risk is garbage. So do you know your risk numbers? Brian and Dunk, you can go first. Like in your head, like, are you aware now of like position sizing? Like, can you?
Oh yeah, I know it all off the top of my head. And I say in front of the community a lot. Like if it's a 0.25% stop loss, I can throw $2,500 on 25x and still hold my 1% loss. If it's a 0.5% stop loss, it's like $1,250, $1,300,
Yep.
right? To hit my 1% loss. If it's like a stupid Pico top 0.1% or 0.1% stop loss, dude, I'm cramming $5,000 in it, right? And hitting 25x long. Because if it comes back up and takes that wick, like that SFP, like the SFP wick, I stomp out, usually break even there minus fees.
Yeah, and it's like
I don't even let the risk hit.
Kind of like what Brian was saying earlier. Like a good system with bad risk is still a bad system, no matter how good it is, right? Is a small risk trade harder to respect mentally, Brian? Do you think? So let me try to phrase this another way. Like, it's not a big trade, right? It's a small risk trade. Is it harder mentally, emotionally? You got greed, FOMO, fear tearing at you. Is it harder to respect mentally? Does that make sense? I'm asking that.
Is a smaller risk harder to respect? Meaning, is it if there's just a small risk, is it harder to take it
seriously? And I don't mean Brian today. I'm speaking to people who are struggling right now with risk control. So the Brian of old, right? Think about it. Like, you want to get rich. That's your goal. Like, is a small risk trade harder to respect mentally?
So you're asking the Brian that was a couple years ago that used to call you in a frantic and say, "Oh my God, I can't do this. This isn't for me." Today, you said something. I think of every dollar, every penny like a soldier on a battlefield. I'm never going to risk 15% of my army in any one battle. I'm never going to take out 2% of my troops in any one battle. If I am, we're stepping away from the front lines of that battle. We're going to regroup, and then we're going to create a system, or we're going to create a new battle, our next battle. For me, I guess I don't really know the answer if it was harder to respect. I don't really know. I know that today every dollar is a soldier, right? And every trade is a battle, and the goal is to win. And when those soldiers get lost, they're gone. I have to get new soldiers in some other battle, and I'm working with less of a fleet.
That makes sense.
I just think about it like that. Like, every dollar matters, every soldier matters. They're all important to me because this is the army, and the army is to grow and conquer. Something you said about the casino analogy, you have better odds at a casino, right? Because the house knows that the house has the statistical advantage. The house never goes up to the table and says, "Hey, everybody, the bids are going up. These guys are winning. The bids need to go up," right? The house just works its statistical advantage over time. And I think that if you have an edge, like if you say, "Oh, every time that this happens," or not every time, but statistically, every time that this happens, this trade works out. So I'm just going to work that trade. Well, if you have that, then you are the casino in that situation. You don't ever have to risk everything in one thing because you're going to win it all. And then, because you're not going to walk away. I think that's what a lot of people, that's what I used to think was like, I'm going to be able to walk away from this early. When really it's like, no, this is a career. This is a serious career. It's going to take a lot of time. You should have a long view, not this short view. So,
I mean, I think with that, depends on your stage, right? And I think the issue grows with you as your account grows.
What do you
And what
mean?
I mean by that is if you start off with say you start off with a $400 account. Let's say you start off with a $100 account and you're $10 in profit, and $10 doesn't feel like a lot of money. It's not a lot of money, right? But according to your account, it's 10% of your account, right? So you're like, well, I'll just hold until, I lose $10 and then you're down 10% of your account, or I get to $20. And then in that monkey brain moment, neither one of those things happen for an hour or 2 hours. And you're just all of a sudden you're out and you're down to $90, right? And I think that monkey brain grows with your account size. Let's just say you don't work it out right, and you're still successful, but you're taking some setbacks. Then all of a sudden you're like $100. It's not enough. Let me get to 200. And then you let it run negative $100. And then you lost 10% of your account that way.
Yeah,
I think that if you have a small account, you have to, it's like muscle matures, right? I think that financially you mature too. If you're trading with a $100 account, you're not ready to trade with a $100,000 account. You're just not there yet mentally. You have to, because I was talking to somebody the other day in the group that was saying like, I have a great win rate and then I'll risk it all and I'll lose. And I was like, well, what's going on? And they said, I'm just not growing fast enough. And I was like, okay, but what is your statistical, what are your stats? What's your win rate? Because if you have an amazing win rate, I'll bank you. Like
a lot of people are just like, if my account was just bigger, I could take profits easier.
Yeah, or when I get to this much, then I'll start practicing good habits.
I'm just going to wing it till then, or hope for a big win till then.
I had someone tell me the other day that they can't use my trading strategy because they don't have enough money.
Well, I love that. And the other one I get is,
what is my
fees are eating up too much of my win.
Yeah, what is my trading strategy? You mean taking the trade, the solid trade of every single day and winning? Like you can't do that. It's excuses in its ego, right? And they're blaming, they're finding excuses for why their risk sucks and their strategy sucks, and their ego is just coming up with excuses for it. And I think it all boils down to ego. So for me, is a smaller trade harder to respect mentally, right? So at the beginning, the answer was yes. At the beginning, I didn't want small trades. I didn't want small risk. I wanted all the smoke, right? I wanted all the risk. I wanted to just double my account on every single trade. And what ended up happening was I just blew up account after account after account after account. And it was a vicious cycle over and over and over again. It's usually not the strategy that kills you. It's almost always risk and position size. It can be both. It can be both too. But a good system with bad risk is still a bad system. Betting big is ego. Betting small is skill. And I see that now, right? Risking small is skill, not risking a quarter of your account on a single trade, because there's always tomorrow. There's always 10 minutes from now. The market's always going up and down like a heartbeat. But the second you get taken out of the market, you're done. It's over. So why, Dunk, if someone doesn't know, right, they do not understand risk to reward, they don't understand the calculation, what would be your advice? Someone's listening right now and they're thinking to themselves, you know what? They're probably right. They're probably right. My risk is probably fucked. Because they're thinking to themselves, you know what? I probably win 40 or 50% of the trades that I take, but I'm still losing. What do you tell them? What is their step? What do they do? Why do most traders skip the calculator, risk to reward? Where would you point them?
Calc.trade, baby. My favorite tool.
Calc.trade is one of them. 100%. Yep. Calc.trade is that's literally a web address we're giving you. Calc.trade.
Calc.trade. And to
And
get the charts to work, you can't be on a USIP, but you can still use the measuring tool.
can you change it to Bybit on there or something else and use it, or is it just only Binance?
I don't think so. I think it's sponsored by Bybit, so or by Binance.
Yeah. Another option, if you don't do VPNs, you don't know all that stuff. You know what? And I'm sure there's 100. I'm sure
they're built into your exchanges.
Yeah, it's
right.
built
You're not
into
as
the exchange.
eloquent.
Built into the exchange, into your broker, but not only that, it's built into TradingView, right? There are long and short tools in TradingView, which everyone uses.
Yep.
Or bar chart or whatever you use, right?
And just to clarify that, a lot of folks didn't know this. We brought this up literally yesterday. If you drop a short or a long positional tool on your chart and go to the settings for that, you can put in your risk management right into that tool, and it'll tell you the USD or the nominal Bitcoin prices to play based on your risk.
And it saves it, right?
It saves it.
It saves it.
Well, you have to save it, but yes.
So another thing number one, you got to play around with the calculators. You got to actually do the work. So nobody goes to the gym, right, Brian? Nobody goes to the gym for a month and then they're like, I'm just not making enough progress. Let me go squat 500 pounds, right?
Yeah.
Nobody does that because what's going to happen?
Usually
Your back's going to break. Your back's going to fucking break. No surgeon in medical school is like, well, I'm not getting to brain surgery quick enough. Let me go operate on my roommate real quick just to speed up the process, right? Like, no lawyer is. My point is, like, we don't do this anywhere else in life. At least I don't, right? I mean, how I do everything, how I do anything is how I do everything. So why trading? Right? Like it's people. Does that make sense?
I think
it's a good analogy.
I think that people do that all the time. I see people who come in the gym, they work out for a month or two. They say, I'm not making gains. It's not working. Let me put this little needle in my butt and I'll get there faster.
But then what happens, right?
And then what happens is they end up hurting themselves.
Yes.
They end up damaging themselves. And typically people who do that, they end up worse than they were when they started. And it's the same thing with people in school. I'm just not getting there fast enough. Let me cheat. Right. And statistically, if you're cheating, right, you're going to end up worse than. So I think that when people try to take the shortcut, it's the long cut. Because for me, what I've learned is it's a journey and it all matters. Every little bit of it. Learning, losing, winning, blowing up accounts, round tripping trades. It's all part of the maturity process. And, but if you try to go too fast, you'll end up worse than you were because let's say in trading, let's say you did 100X, right? You 100X something, you hit that 100X. All of a sudden you went from a $100 account and then all of a sudden you're just trading with a $100,000 account. You don't know how to trade with that money. You didn't get there organically. And
what's a good example of that?
You don't know
see?
what you're doing. If the brain surgeon just lied his way into surgery, when they gave him that scalpel, that person is screwed. It's the same thing with trading, right? If you got lucky, that's why it's almost worse if you get lucky. Because then you really have a false sense of what's going on.
Who's the example right now floating around on X who doesn't know how to
James
trade?
Wynn. James
got
Wynn.
lucky on a meme coin. Consistently blows $100,000 positions.
That was me. I got lucky on a meme coin. I got lucky on Doge, right? Way back in the day when I first started tweeting about it, and then I blew it up, right?
Yeah.
That was me.
Wow.
A false sense of I don't know. Confidence. Yeah. Thank you for completing my sentence. I didn't have a word there. That was perfect timing too.
Just slide that one in, Jamie.
And really, it hurts on everyone. It hurts everyone. There was a bunch of people who got lucky on meme coins, and then all of a sudden they got all this money, so everybody's listening to them when really they don't know what the hell they're talking about.
Yeah, I think Alex Becker's a good
they don't know,
too.
and then you got 100,000 people listening to them, thinking this guy, he's got money, he really knows what he's talking about. It's like,
go to what's the tool that shows you the liquidations in real time? I mean, a lot of them do, but drawing a blank. It dings. It's the really annoying one.
Oh,
the order book
Air Trade.
Yeah. Look at the $1 million traders lose $1 million over
over and over and over again. And we see it. We'll see it like on the break today. The
700
fake
Bitcoin short at the
breakdown.
bottom.
Yeah, there was millions and millions of dollars, right? Per trade, 10 million, 15 million, 5 million, 1
Yep.
million, over and over and over again. People shorting a breakdown from, what was it, Asia low, right?
Yep.
And then what happens? They got
It went
smacked on their ass, right?
Oh,
and
God.
that's where I entered.
Closed
That's
out.
where we entered. Yeah. So look, I want to talk about the other side of the coin now. So, we talked a little bit about risk, and we'll talk more about risk in future episodes and on our sister channel, Tactical Edge Trading Academy, right? And in Discord, all the time. We hold weekly groups. Come on in, check us out. But I want to talk about the other side of the coin now. And I've seen this, and I'm not going to name a name. I've probably seen this twice, that I know of, right? Some traders are very disciplined. Some traders have great risk. They're not over leveraged. They're not going crazy, but their system is trash. They're trading bullshit. They're second guessing themselves. They're hopping in late, hopping in early. They're chasing. They're swapping indicators, chasing strategies. It's like trying to build a house on quicksand. It's not going to happen, right? So Dunk, first question: how do you actually know if your system has an edge or if you're just gambling with stop losses attached?
You got to let the trade play out. Like, a lot of people switch strategies before they even know if the strategy they have works.
Yeah, Brian, you got something to piggyback on that? Like, how do you know, Brian, if your system has an edge? Like, if someone said to you, if someone was like, dude, I'm struggling right now, and you're like, all right, let's hop into a one-on-one, let's figure this out. How would you know if their system is just trash? Or, and you said it, right? Show me your system, I'll show you your results. So what does that mean? What does that look like?
Show me your system and I'll show you your future, right? So it's
Yeah.
like if you have a systematic system that you repeat over and over and over again, you will next be forced to gather the data. And for me, it's like every night I do my little nightly review, right? And in that little nightly review, I have the time frame of my system, right? And my nightly review, I'm giving it a wide angle view of some some swing trades, right? And I'll have a bearish scenario and a bullish scenario, and I will save those in a file, and I will see how they played out. So it's like if I say, hey, here's some resistance, I'm going to say that, when we enter into that resistance, if XYZ presents itself, then I'd say that this would be a valid short trade. If that short trade played out, I would probably take a little bit of profit at the nearest intraday support and leave a little bit of a runner just in case it keeps on going. That's my system. Day after day after day, it never changes. Playing support resistance, taking some profit at an intraday where could possibly change direction, and then leaving a little bit for a bit of a runner. And a lot of times I'll go back and I'll say, that trade worked out, or that trade didn't work out. Let me look at why. I think if you have a good system, then you're planning out trades in potential areas. If what you're planning is going to happen at the place you're planning it, then you have a good system. It's all just planning battles to me.
Yeah, I mean, so here's what I would do. If someone came up to me and was like, dude, I'm struggling. I don't know what's going on. My risk is good, right? Like I'm 1% every single trade, no matter what, but I'm just not winning. My first response to them would be, here's what I need you to do. I need you to go to FedEx office, copy the last 100 trades out of your trading journal and send them to me. Because that filters out whether or not they're journaling. If they're like, well, can't do, come up with excuses, that's their issue. Number one, you have nothing. You don't even have a system. You don't even have an edge because you have nothing to back it up. Nothing. You're just guessing. You're just gambling. But if they did do that, I would hope they would be able to tell me what their win rate is, right? Like I'm winning 40% of trades, 50% of trades, 60% of trades. Maybe they're winning 70 or losing. But then I would drill in beyond that into where are you losing? Is it the actual system, or are you jumping the gun? Are you not following? Like, what are you doing with your stop losses as they go up? And I think a big part of the reason, and I've seen this, man. Like, here's what irks me. When I get a notification on my phone and the notification says, "Hey guys, I just figured something out, found a crazy indicator that is 90% accurate. I
cracked the code.
I cracked the code. I haven't done any of the
Yeah.
testing on it yet, but what do you guys think about it?" My instant response is, "Bro, you just wiped out any progress you've made now since the last time you found some magical indicator, some magical system. You just wiped it all out." Because
Yeah.
why? There is no fucking magic strategy or indicator. It does not exist. If it did, we would all be rich.
Nobody would be wrong. The market would always go up.
Yep, market would always go up. And we all know that that's not the case. So when it comes to strategy, when it comes to testing theory, what's the difference between gambling and testing, do you think? So you're 4 months in, you're trying to kind of work on something. You got a couple ideas, a couple strategies that you're working on. What's the difference between gambling and testing, Nick?
I mean, testing for me is I'm not putting money on the line. I'm just back testing on the charts. Like, I'm just using the replay tool and I'm loading up a paper trading account. Here's literally what I do for fun. I back test New York Open and Asia Open almost every single night. In my downtime, when my wife's reading in bed, I've got my Samsung tablet open and I'm running back test. Pull it to New York Open, pull it to Asia Open, just keep going back. Or I'll go back like 2 months and then I'll fast forward it to Asia Open and then New York Open and then Asia Open, and I'll make a play every single day. And at some point, you see what you're doing wrong and what you're doing right. And you can literally journal that way too. You don't have to put money on the line. You don't have to wait to New York Open. There's history of New York Opens. There's history of Asia Opens. There's history of the hour. Everything's got history. You're trading historical data constantly. So why not go back and use historical data to teach yourself?
Yeah. Brian, what about you? What do you think is the difference between gambling and testing?
I think that you said it previously when you said I would ask somebody to go to FedEx and send me your last 100 trades. It's so simple that it eludes people. Like, are you even recording your trades? Right? Do you even know how many of your last trades? I mean, you start there, right? What's your win rate? What's your last 100 trades? Right? A lot of people don't. They have no clue.
Yeah.
They have no one place where they're keeping
and just to
track
let you
of
know, that's where the conversation ends with me, with these people, right?
Mhm.
Is we've been talking about this. We've given you the blueprint. We tell you, if you do this over the next 6 months to a year, you're going to be profitable. So if they come to me after 6 months, after a year, and they can't produce that, the conversation's over. It is.
Yeah.
It's like, imagine anything else. Like, you step up to Brian's going to be your personal trainer or your dietitian, and he asks you to come to the gym and you show up in jeans in
Eating a Big
polo
Mac.
shirt. Yeah, eating a Big Mac. Like, dude,
Yeah,
you're not taking it seriously enough to be worth my time anymore.
And I think it breaks down to a system that has no emotion. When I was training for my show, I had a professional coach, and that coach gave me one piece of paper that had every calorie I would consume. He said, "Here, you will only eat this when I say to eat it." And then he said, "You will go to the gym and do exactly this, and that's it." And it's like, it takes all thinking, it takes all emotion, it takes everything out. That's my system. I'm going to execute that system. One day I called him up and I said, "Man, I'm having a hard time sticking to my diet because I love peanut butter." He was like, "Okay, well then bye."
Yeah. Would he cut
I
you if you
can't-
just ignore what he told you to do every day?
I can't do anything for you if you turn into a little bitch every time you see some peanut butter. Goodbye. And I was like, oh, wow. And it's the same thing with trading, right? If you have a system, you can come here and we can help you design a system. But if you can't stick to the plan, bye. There's nothing anybody can do for you. If you say like, oh man, I win 5 trades and then I risk everything and I lose everything. I'm so frustrated. It's like, nobody cares if you're frustrated, bro. No,
We're all
nobody
frustrated.
cares about any of that stuff. It doesn't matter. It's all in your head. If you can't stick to the plan, then
So I think that's gambling, right? Like that's what gambling is. Gambling is not doing what you're supposed to do. Anything
Yeah.
short of not in what are you supposed to do, right? You're supposed to journal your trades. You're supposed to risk only 1% of your account on a single trade. You should be aiming for at least a minimum of a 3-to-1 risk to reward. I mean, I don't take 2-to-1s every once in a while, no, but generally speaking, I think that should be the goal for new traders is 3-to-1. It's stuff like switching system to system and chasing indicators and listening to idiots on Twitter. All that's just gambling, right? Not properly plotting out your levels. Waking up 2 hours after market opens or waking up right at the bell rings and then hopping into a trade is gambling.
Yep.
It is. It's like not stretching before you squat 500 pounds, right? You might pull something, right? It's the same.
Your countdown.
It's the same thing. And then what is testing, right? So testing is where most people mess up. And I'm going to say testing / refining a strategy, right? Should new traders forward test one setup for 100 trades? How many trades is enough? Let's say I'm going to learn support and resistance trading. I'm a brand new trader. How many trades is it going to take me to get it? Is it 100? Is it 150? Is it 50?
As many as it takes.
It's as many as it takes, right? And it should be done with probably nothing, maybe a little bit of volume thrown in there or something, because you're learning support and resistance. You're not learning, all this other crap. That's what you're learning. Can you be profitable on a simple system? Like one simple system, right? Like one setup. And what's better? Is it better to master one setup or dabble in 20 different things?
I'm a one-trick pony, brother. Maybe a 1.5 now.
Yeah, I mean, I got, a couple things like S&Ps.
I mean, I have a strength, and then I have things that are becoming strengths.
So I guess I could look over my journals and give you a definitive answer on how long it took me to, and I have not mastered SFPs, but I'm pretty freaking good at them, man. I'm pretty good at spotting them. I'm pretty good at watching the reactions, seeing the trap traders, watching the handshake, and winning. And it wasn't always like that, right? First of all, they used to trap me. I used to be the trader who would be trapped in that SFP, right? And then it morphed into, well, something's going on here, so how can I avoid that? Into learning what's actually going on there, and then into forward testing it hundreds of times, and then trading it hundreds of times over years and years and years. That has gotten me to, I don't want to say master, but I'll say an expert at trading SFPs, right? It wasn't like I'm just throwing a bunch of shit at the wall and then working on this and then working on that. No, that was my fucking focus. And that was it. And guess what SFPs usually are, right? The best fucking trade of the day. The best. The pico freaking bottom or top of every single move. More often than not, right? So Dunki, you mentioned backtesting, which is backtesting is important. I lean towards forward testing being more important, and here's why. False signals, right? Like if you're backtesting for new traders, mind you, I think Dunki, you know how to backtest properly, but I don't think most people do, right? So I think if you know how to do both properly, then they're equally as valuable. But when I think it comes to backtesting strategies and backtesting indicators, what most people don't realize is they repaint, right? Which means, of course, it called the move right because it's based off of historical data. It's not based off of what happened. Like, you guys can test me on this. I don't mean you two. I mean, you guys, people listening. One of the most ripped off indicators on the market is the divergences for many indicator, right? And it gets repackaged and sold as for thousands of dollars.
Yep.
right?
It's free.
And it's free. And people repackage it and sell it. And without naming names, we caught people on this, right? And literally called them out. It's the same thing. But my point is, throw it on your chart and backtest it. It looks like it hits 9 out of 10 times, right? But then watch it in regular forward action price. Watch it as price is ticking. That thing is flashing off and on constantly. If you're taking trades based off of that, you are losing. So it works historically, but it doesn't work in forward price action unless you really know what you're doing. And, don't let ego tell you that you 100% know what you're doing, especially if you're an unprofitable trader. So
Yeah.
I think both are strong. And I feel like I had a point I was going to make there and I lost it. So
Backtesting correctly, just for the historical record, people listening, repainting means it will show a signal on the candle, but the candle is not closed. But when that candle actually closes, the signal is no longer there.
Right.
Just if anybody's confused about that. But almost everything repaints, right? Because it's all historical data. It's all moving average data.
Yeah. I mean, there's 100%. So do indicators fix a broken system? Do indicators fix shitty risk management? No, there's not an indicator in the world that's going to make you.
I think that's like my one piece of advice to everybody. Like, if you're just starting, just throw the RSI in there, or the MACD, or the stock, and then forget about everything else. Because if you go out and you start buying $1,000 worth of indicators, you're losing money you could have been trading with. And we both did that, man. Like, to a point where it was like,
and listen, we're not up on soapboxes here, like preaching to a crowd. We've been there, and we're trying to save you the time and the heartache, because it's a common thing. It's a common thing for people to do this in trading. I think there's a common path that usually ends in people quitting trading, right? People blowing up and quitting trading. What?
When you finish that thought, I'll hop back on here.
Go ahead. That's
so
it.
I had somebody text me the other day. Okay, this may have been a couple months ago now. Like, I think that one of the most popular indicators right now is it's always been in crypto, the Cypher B, right? And somebody DM'd me on Discord and says, do you think I should spend the $800 on Market Cypher B so I don't have to use, I can't even remember what's the name of the free one? Fu Manchu. Dude, if you think the difference between Fu Manchu and $800 in spending is going to save you your system, oh my God, dude. It's not, guys. It's not. Buying an indicator, Lux Algo or Market Cypher, sure, they help when you know how the indicator works, when you have a system to plug them into, but they're not your system.
So I think at some point here, just to kind of tie everything together now, at some point, you have to have a come to Jesus speech with yourself, right? If you're serious, you've got to fix it. And it's not complicated. Cut your risk to 1% or less. Pick one setup. Forward test them for 100 trades and journal the whole thing. That's it. That's the blueprint. It's fucking boring, but it works, right? So Brian, we'll kind of tie everything together here. If someone's in the hole, if they're bleeding, if they don't have any confidence, right? And I've gotten the text, man. I get DMs, whatever, messages in Discord where people are like, I don't think trading is for me, right? Mm-hmm. And then they'll be fine for a month. And then I don't think trading is for me, right? So this confidence shot. What do you think the first thing they should attack is? Is it their risk? Is it their system? It might be mindset, right? Like usually, like I used to try to like pep people up when they would come to me and be like, hey man, I just don't think trading is for me anymore. And I used to try to like pep them up, right? And I've stopped doing that recently because I think, man, like once you make up your mind that trading's not for you, it's not for you.
Yeah.
Well, let me ask you a question.
Yeah.
Is trading for everyone?
Nope.
Then you know what? When somebody comes to me and says, hey, I don't think this is for me, I think, hey, maybe statistically, that probably is true.
It checks out. Yeah. And it's not, there's no shame in it, right?
People will come to you for a pep talk, right? You're a rich and successful trader. So they might come to you and say, hey, I suck at this. It's not for me. Okay. Hey,
Okay.
I'm glad we had this talk because now you know yourself better. Now you can go on and be happy.
Yeah,
But
not
most people
every
don't. They don't want to quit, and they're losing, and their emotions are messed up, and it's probably because they don't have an edge. And then when they are winning, their risk is messed up. That's it. Like, right? You can just keep it simple. Define your edge and work in a proper risk with the slow growth around it. That's it. But it's simple and it takes a long time. And people are complex and they like complex shit. That's why most people will spend $1,000 on an indicator, but if they lost $1,000 on a trade, they'd be calling the suicide hotline. They spend $1,000 on an indicator and they're excited. They lose $1,000 on a trade and they're like, this isn't for me.
Yeah. I think it's the most dabbled in hobby and the least like dialed in. Like everything makes it so easy to trade. You can hop on any app and buy a stock. You can hop on. Christ, you can risk your 401k now on these apps. Like it's an issue, man. It's like an addiction. I think if you're not good at it and you're years into this and you're just drawing down, you're. I mean, first of all, you're just gambling, right? But you haven't wanted to take the time to figure out how to make it work, and you're just. I don't even know like a polite word for it, but you're just having fun, right? The risk you're taking for having the fun has got to be worth it to you until you take it more serious.
Yeah, and look, you just got to do it, right? Like it hurts every time I pick up this live wire, right? I get shocked every time I pick up this live wire. Well, stop picking up the fucking live wire, right? Stop trading like a bitch, you know what I mean? Show up to the charts like a man. What you should fix first is what? Risk. That's it. That's your first fix. You need to rule out if it's risk. And we've talked about all the reasons why. Because you can have a great system and shitty risk and you're going to lose, right?
Mm-hmm.
You can have impeccable risk and a halfway decent system and win. Statistically, you can, right? If your targets are right. Why is 1% risk the magic number, Nick? Like why is that a number that hedge funds
literally gives
use?
you 100 trades before you have to. Yeah.
Yep. Not only that, but did you know that hedge funds operate right around a 40 or 50% win rate as a whole?
Right? As long as you're 51% and you're risking the same thing exactly the same way every single time, they're going to be winning up.
Yeah. Is journaling the cure to I suck?
It's all formula. So I treat it like an engine, right? Sure, the car can run without a muffler. Sure, the car can run without the hood on. Sure, the car can run on a donut. And when you start taking enough pieces out of your system, it starts to fall apart, right? And you start skipping, like, say you have a system and you dial it in, and then when you deviate, that's when it falls apart again, right? So you have to build the mechanics of the system. And once the mechanical pieces are together, it flows better. It makes the system. So if you have 99 pieces, you got too many pieces. If you have 10 pieces, it's a more acceptable system. So you don't want to have like 15 indicators on it. You don't even want to have more than 2, in my opinion. More than 1 in some cases if you're brand new, right? But the least amount of moving parts makes a good system. Because when you take away one of those moving parts, it puts a kink in the wrench and you start going the other way. It's all about just, at the end of the day, you gotta refine and fine tune and stick to it. So every time you deviate, things change. And I see that still these days. And I'm sure you guys see it still these days.
Yeah. I mean, I remember having to have a hard conversation and hard look in the mirror with myself. When I was losing, I had to stop lying to myself. Look, it's either risk, system, or both. That's it. It's either your risk sucks, your system sucks, or both. You fix your risk first. Then you build your edge, one setup, one trade at a time, over 100 trades. And when you risk 1%, guess how many trades you could take on an account, right? 100.
Yep.
Before it blows up. You don't.
And if you're wrong 100 times in a row, dude, you're doing something wrong.
Yeah. You don't. Here's the thing: you don't need to win every trade, right? You just need to stop sucking at the basic shit of risk management and testing. Like, that's it. Like, you don't need to be right. You just need to make more money when you're right and lose less when you're wrong. Isn't that what who's that super liberal investor guy or trader guy?
I don't know.
Oh, come on, dude.
Like someone in our
George
community or
Soros.
like a big guy?
George Soros.
Gotcha.
That's his. I probably
Sorry, I went to
butchered.
like influencers.
I probably butchered the quote, right? But it's like, we're not here to be right. We're just here to make more money when we're right and lose less when we're wrong.
Yeah.
That's it at the end of the day. And if you can't stick to the blueprint, you're just gambling. Any words of wisdom, Brian, before we cut this, that you want to impart upon people who are stuck in risk, stuck in system, or both?
Yeah. Trading, a big part of trading is losing trades. And if you're listening to this and you're like, okay, hey, maybe I don't have a system, right? Come on into Tactical Edge and tag me and we'll see. We'll create a system. For me, I just keep it very simple these days. I got to know where I'm in, I got to know where I'm out, and I got to know where I'm wrong. And then my system is that little window of why I'm in. This is why, this is what, this is where. And that's it. And I think about trading a lot these days like poker. I'm not going to win every hand. And I got to ante up every hand. No one ever gets mad. Just, I just lost a $50 ante. I suck at this. This isn't for me. It's like, no, it's poker. It's a long game. Think about it like a long game. Ante up and know when you're pushing in your chips and know why you're pushing in your chips. You're saying, statistically, I got a really good hand. Statistically, by the cards that are on the table, I'm winning this hand. Let me up and push in my risk according to my strength. That's it.
Dude, are you playing poker with $50 antes?
That would be gambling, sir. No.
Shit, we play with $1, $2 blinds. Dunk. Throw some. I mean, yeah, but I mean, the pots go up to $1,000. But
Gotcha.
go. What do you got for people as parting?
I would challenge
advice?
everybody to take profits at 1% on your next 10 plays and cut it for the day.
Yep. That's all we got. That's all I got. Tactical Edge, traders.com. Find all of our links, Discord. Come on in. Message us. We'll give you 30 free days of premium. Later,
guys.